In this video series, I'm going to show you the 3 simple steps this gorgeous trader used to become a profitable trader in a relatively short period of time. I'm also going to show you my formula for how to trade stocks in about 60 minutes a day so you don't have to sit in front of your computer all day. And this trading method works great in both rising and falling markets, so you have the potential to make money no matter what the market's doing. And over the past 12 years of trading the stock market, I've found 3 pillars that are crucial for becoming a successful trader. And if you don't incorporate each one of these pillars into your trading, then you'll likely end up in the 90% of people who actually lose money in the markets. And over the next few videos, I'm going to take you through each pillar to help you hopefully become a consistent and confident trader. And if you're not currently happy with your trading or investing in the stock market, it's not your fault. You just haven't been taught how to apply these 3 pillars yet. There's just so much misinformation, outdated strategies, and gurus who claim you'll get rich if you just follow their advice. And I know how overwhelming it can be to find a straightforward, effective approach to trading stocks. So rest easy, because these videos will very likely answer some key questions you've probably had about trading and maybe even give you that aha moment you've been looking for. I think right now is the best time in history to trade stocks. Technology's made it possible to trade from anywhere in the world, and recent market volatility has created a tremendous opportunity for people that want to trade from home without a boss, employees, and with very little overhead. And over the past few years, I've spent most of my time trading from some of the coolest places on the planet. In fact, I spend about 6 to 9 months out of the year traveling around the world, scuba diving, mountaineering, and enjoying the benefits from trading online. And my goal is to show you a clear path to hopefully help you achieve your trading goals and teach you how to understand and properly manage risk. This is perfect even if you're currently frustrated with your trading, or if you're brand new to trading, even if you have a small trading account. So let me go ahead and introduce myself, and we'll jump right into the training. If we haven't already met, my name's Chris Dunn, and I just want to say thanks for joining me over the next few training videos. Just so we're clear, my motto is no hype and no get-rich-quick claims. I'm just going to be giving you some high-level training that I've gathered from my 12 years trading the markets and 7 years teaching other people how to trade. So since high school, I've been absolutely obsessed with creating wealth and trading the stock market. And here's a 2-page spread from my high school yearbook that talks about the first business that I started and sold all during high school. And right after graduation, I skipped college and went to work at a mortgage company to get more real-world business and finance experience. At that time, I was still actively trading stocks, but I could only trade the first hour of the day, so I had to create a strategy that allowed me to get in and out of the markets in a short period of time. My goal was to get to the point where I could actually quit the mortgage industry and become a full-time trader. And a few years later, I did just that. After years of trading and developing trading strategies, I started teaching other people how to trade, and fast forward to today, my team and I have helped tens of thousands of traders in over 40 countries. We have a wonderful team that supports our students, and we hold regular trading events at our headquarters here in Austin, Texas. And I just want to show you that we're a real company, not some fly-by-night guru. About a year ago, I wanted to see if I could take someone completely new to stock trading and teach them how to apply the 3 pillars of the trader formula. And who better than this beautiful fitness chick who just happens to be my wife? I taught her the principles you're learning in these videos, and within a relatively short period of time, she started to become a consistent trader. And here's an equity curve that, after a bit of practice, shows her first 90 days of consistent profitability. Notice how there's a nice uptrending account growth, but it's not a straight line up, which means that every trade isn't a winner, and she still has drawdowns and is constantly working to increase her trading skills. And keep in mind, there's no guarantees in trading, and I'm not saying that you're going to achieve these results, but I can assure you that if you apply the trader formula strategy, you'll have a crystal clear plan of action to find big profit potential trades to help you manage risk by putting the odds in your favor. And since she now has the freedom to do what she wants when she wants, she's offered to help other traders too. So you'll actually hear more from her later. Recently, we surveyed over 15,000 traders and asked them what were the top 1 or 2 things that they thought were holding them back from achieving their trading goals. There were 2 problems that over 90% of people had. The first problem was hesitating on pulling the trigger on an entry of a trade, and the second was not being able to hold for profit targets. In other words, they didn't have the confidence to get into a good trade, and they often got scared out of good trades by closing their trades too early before price hit their profit targets. And what we gathered from this information is that most people struggle because they don't have a clear-cut strategy for finding high profit potential trades, and they don't have a way to find profit targets that give them confidence. So that leads us to the first pillar of the trader formula, which is having a simple and effective trading strategy that shows when to get in and when to get out of a trade. And the reason why I developed the trader formula was to give people a strategy to help eliminate these problems and to help you gain the confidence to pull the trigger on an entry and ultimately hold for your profit targets. And to help you with this pillar, I'm going to give you one of my favorite trade setups for free. Why am I doing this? Well, I know that if I can help you get started trading the right way, the odds are you'll come back to me for even more advanced training. And after all, training traders is what my business is all about and what we've been doing well for the past 7 years. And the setup I'm going to show you works well in both rising and falling markets because as day traders, our goal is to make money no matter what direction the stock market's headed. The name of this trade setup is the Daily Consolidation Breakout. And this is a very simple and effective high probability trade setup that gives us the chance to find low risk, high reward entries. And we keep this setup very simple by using only a couple of indicators and 2 time frames. So the 2 time frames that we use are a daily chart and then a 2-minute chart. And the daily chart is actually used to help us find the trade setup. So we're actually taking the daily consolidation breakout based on the price action on the daily chart, and we're using the candlesticks here on the daily chart. And on the 2-minute chart, we're using this to help us with timing and precision to help us find the trade entry. Okay, so again, the trade setup itself is actually taken because of the daily chart. That's the reason for taking the trade. And then we are just timing it with the 2-minute chart to help us get the best available price for our risk to reward ratios, which we'll talk about in a later video. And the indicators that we use, again, we're using candlestick price bars on both time frames. So this is the daily chart up here, and this is the 2-minute chart below. And you can use any trading platform and any charting system that you want. And in a later video, I'll actually show you how you can use our professional trading platform for free and get full tuition reimbursement through one of our preferred brokers. And the other thing that we use is volume on both charts, as well as a 13-period exponential moving average. All right, so we have a 13-period EMA up here, as well as a 13-period EMA on the 2-minute. And then we also look at the ATR, or the average true range, on the daily chart. In other words, we want to know what range the stock has been trading over the past 10 trading days or 2 weeks. And this will give us a good idea of the current volatility in the stock. Now, as far as the setup criteria goes, what we're looking for is, again, we're trading off of the daily chart here. So you're looking to find a stock with rising lows and squeezing into a clear level of resistance that's been tested for 2 or more days. So in this example, you can see down here we have a low down here that's a little bit off the screen, higher low, and the price is basically moving up and tapping on this resistance level. And what we're looking for is a confirmed strong breakout of this resistance level. Now in the stock market there are many fake out breakouts, and so just looking at the daily chart alone there's not going to be any edge there. So we're going to add the next step, but before we get to that, I just want to say the more days of resistance that you have up against a level, typically the stronger the breakout. And again, I'm giving you the rules for the setup, the entry, and the management here in this video. And then in the later videos, I'm going to show you how we can actually make this a lot easier and show you all of the trades that are primed and ready to make big explosive moves in the near future. And the final thing here is you need to be above the 13-period exponential moving average. And a lot of times you'll see that it will actually act as support, right? And so here you can see rising lows, resistance, 4 touches of resistance. So basically 4 days tapping on the same resistance level. And then on this day, you can see the market opens right here and then has a true trending day where it trends up beautifully and closes almost all the way at the high. These are the type of breakouts that we're looking for, right? We're not looking to get 1 to 2% out of these moves. We're looking for stocks that can move anywhere from 5 to 30% in a single day, and oftentimes in less than an hour. Okay, and so when it comes to the entry criteria, what we do is we look for price to break out of the daily resistance level. Okay, so again, the trigger is based on the daily chart. So you need a breakout of that key level on the daily chart, but you also want to correlate that with a 2-minute breakout pattern around the same price. Okay, so what I mean by this, and let's just say this is $8.30 on this stock. Let's just say that this is the daily breakout level, which it actually was on this trade that we took. So this is the 2-minute chart, but the daily breakout level correlated at the same price. So what happened was you have market open, the market opened here, ran down, started to retrace, so price retraced off of resistance. We weren't sure if it was going to break out, and then it recovers. So every 2 minutes a new bar plots and they start to make higher lows. They put in resistance here at 830, and then what we're looking to do is after price establishes that intraday resistance, we're looking to buy on a break of that intraday resistance. So the thing that makes it intraday is the fact that this is a 2-minute. Right? And if it correlates with the daily breakout level, then you have a valid trade. And you can see we got a fill here maybe at 831, and then it moved up into our profit targets up here around 845 to 850. Okay? And so just to review the rules again, you're looking for price to break out of the daily level that correlates with your 2-minute breakout pattern. And one thing that you really don't want to do, and this is where you're going to significantly put the odds in your favor, is you do not want to buy off of market open, okay, without a 2-minute breakout pattern. Because what will happen, say the market opens and it pops a little bit above the breakout level on the daily chart. And so if you buy here at market open, this could be a fake out breakout where it just pops up and then crashes. So what you're doing by giving yourself a chance to look at this 2-minute intraday breakout pattern is you're increasing the odds that you're actually going to have a real breakout, and you're getting in at a level where you can minimize your risk. So you're getting in at a very, very clean level. Notice how we're able to capture most of this move. We scaled a little bit out on this first bar right here, but most of the position was actually closed up here around the top. That's because we predefined our profit targets, which is the next step. But again, the real key part of this is making sure that you wait for that 2-minute breakout pattern. And the entry is typically triggered within 5 to 30 minutes after market open, and the trade is typically done within the first 60 minutes of the day. Sometimes it's quicker, sometimes it takes longer, but on average it's about an hour a day. So in this stock, you'll notice that the entry was triggered here at 9 o'clock Central, so that's 30 minutes after market open, and then we were out of this trade by about 9:30 to 9:40. So about an hour and 10 minutes or so, give or take. Just really, really beautiful trade setup. And that's exactly what we're looking for, is these higher probability, low risk entries that have the potential to really take off and give you big profit potential. Now, when it comes to trade management, I'm going to give you our simple management criteria. And this is going to be the way that you can really eliminate as much confusion and guessing as possible just by having a very, very simple trade management plan. So your initial target is going to be 1.5 times the average true range. So on this example, let's say that your ATR was 20 cents. So over the past 2 trading weeks, on average, the stock moves 20 cents a day. You're going to multiply that times 1.5. And that's going to give you your profit target. And now that's going to be your initial profit target. Sometimes it will exceed that, sometimes it will fall short. And so what you want to do is, after the breakout is confirmed, after you have your intraday 2-minute breakout pattern and it starts running towards your target, you can actually start to trail the stop behind the 13 EMA on that 2-minute chart. Okay, so again, your initial target is going to be 1.5 times the ATR, and then what you want to do is evaluate when you get to that level, and once the breakout is confirmed, you're going to actually minimize your risk by trailing your stop behind that 13 EMA. So now that you know some of the basics of the daily consolidation breakout, let's go ahead and take a look at some actual recent trades that we took. And we're going to start by looking at some long trade examples. And let's just take a look here at GGAL. And I want to point out the chart layout. So up here at the top, you can see we have the daily chart. And then down below the daily chart, you can see we have the same ticker just on the 2-minute chart. So if you recall, the daily consolidation breakout is actually taken based on the daily chart. So we have a nice uptrending stock for the past few weeks and months, putting in higher lows, and then we start to squeeze into this $10 resistance level. So you can see we have multiple days of resistance there at $10. And then when we look down here at the 2-minute chart, one thing you'll notice is when the market opens, so this is the first bar at market open. The market opens, starts to pull back, and then gives us that little intraday breakout where it pops above that resistance level. And you'll notice we are actually above the breakout point on the daily chart. So we're getting in a little bit above, about 10 cents above the daily breakout level. But what that's doing is it's allowing us to get into a level where we can really minimize our risk and put our stop behind the low of the day. And then you'll notice as the market goes up, we get up into our target. And so we're risking about 10 cents to make about 25 to 30 cents. And again, you never know what you're going to get out of the move. Sometimes the breakouts go for 20, 30, and sometimes 40 or 50%. Sometimes on average, they actually go anywhere between 5 to 7%. So this is what we're really looking for, is base hits that move 5 to 7%. And one thing you'll notice here on NCI, we have a very similar situation where we have a stock that's trending up. We get up into resistance, which is a little bit below that $16 level. And then if we take a look down here at the 2-minute chart, you'll notice the market opens. We don't get a pop right away. It looks like it's going to sell off, and then it recovers and puts in resistance there at that 1595 level, which just so happens to line up with the prior day's high. So if you look at the prior day's high, which is into that resistance, which is right here from the prior day, we get up into that level, put in that intraday 2-minute breakout. As soon as we pop up above that, again, we have a very, very clean low risk entry. And look at the volume that comes in right after we get in. I'm sure we were part of this volume, but you know, that is definitely confirming this breakout. And then we move up into our target up there around 1620. Just a very beautiful pivot to pivot move that takes about anywhere from 60 to 90 minutes to play out. Now the next example I want to show you is a stock that actually took a lot longer to play out. On average, these trades take anywhere from 30 to 90 minutes, on average about an hour a day to actually play out. But every now and then you'll get a slower stock like BBD that you can see, again, really beautiful daily consolidation breakout right here around 1440. And then here's the intraday, where the entry actually didn't come until about an hour or so after market open. And then you can see we basically trailed the stop throughout the entire day and closed the entire position around half an hour before market close. So we scaled out here in the afternoon. So this is what we call like a true trending day stock, where you get in the morning, you set it and forget it, trail the stop, let the stock work. And again, I just want to show you this because not every single trade is going to get in and out in half an hour a day, but on average, they're going to last about an hour a day. But just be prepared that if you want to hold for some of these longer term trending stocks, you do have that option as well. And then the final thing I want to show you here is just a stock that we really love to trade, that we've traded quite a bit over the past few weeks and months. IMMU, you can see we just have multiple trade setups. As a stock is trending in one direction or the other, sometimes you can find 3, 4, 5, or sometimes 6 or 7 days that are actually tradable, and you'll look back at your log and you'll say, oh my God, I've made a killing over the past month in this one stock. That's because whenever a stock is in play, whenever it's moving like this, and you have great volume and great volatility and just really clean price action, a lot of times you can pull profit out of a stock many times in a row. All right, so let's go ahead and take a look at some short trades because, as I like to say, the market takes the stairs up and the elevator down. And a lot of people are actually scared of bearish markets or markets that are falling, but professional traders know that they can actually make a lot of money as the market is falling. And so I just want to show you some examples of how you can look at the same trade setup on the short side. All right, so basically what we have here is FRAN, and you can see about a month and a half ago we had a massive gap down, pull back, lower highs, and then the market was squeezing into this support level. So it's the daily consolidation breakout inverted, where we would, on the bullish side, we'd be looking for a breakout to the upside. What we're looking for here is a crack of this support level, and you can see just really, really clean support. So here off of market open, we get the same thing, where the market opens, it falls off a little bit, gives us a pullback. There's your intraday breakout. So what that does is it shows you where you can get a low risk, high reward entry, and then as the market moves down and finally crashes through this support level, there's your profit. And sometimes you'll pick the bottom, sometimes you won't. The market and trading is not about picking tops and bottoms. It's about getting the meat out of a move. If you try to pick the exact bottom and the exact high of a stock every day, you're going to drive yourself crazy. It's really just about looking for, getting the meat out of that move. Here's another example on HK. Beautiful, beautiful trade. You can see the market is squeezing into the support level here at about 460 or 465. Many, many weeks of support, and so we know if and when this thing cracks, it could be a major crash. Here you get market open, the market sells off, pulls back, gives you your intraday breakdown right there around that 460 level, and then you can see the market continues to sell off until about an hour after market open. Next example is TWI. You can see market continues to make lower highs for weeks and weeks. We put in support down here around 1550, and here off of market open, you have the market that basically opens down. You have a little bit of a gap down, it pulls back, and then gives you a very, very quick intraday break. So this intraday break, again, this is a 2-minute chart, so 2, 4, 6 minutes after market open, you get your entry, and then you cover a little over an hour later. All right, and then you can see the market continued down over the next few days. And then the next example that we have here is SSNI. And you'll notice on this chart, this doesn't look, after the fact, this doesn't look like a massive down day, right? It looks almost like a little bit of a doji or a reversal bar. But again, what you have is a strong downtrending stock, pull back with lower highs, pulling into resistance right around that 15 level, or a little bit above 15 of support, excuse me. So you have support here at about 1510. Here off of market open, you get the little bit of a gap down, pull back, intraday break, and then you get a really, really massive flush out, right? So our target was actually down here around 1465, and that just so happened to be the low of the day. You don't always exactly pick the low of the day, but sometimes you get it, and then you can see the market actually recovered quite a bit from there. That's why it's really nice just to be able to get in a few minutes after market open, and you can see we covered here, 45 minutes after market open. So a very, very quick and very, very profitable trades. So one thing I want to say is please don't be overwhelmed if you don't understand everything that I'm talking about. Feel free to go ahead and download the 60-minute stock trading blueprint PDF. This will, again, kind of walk you through the steps of the setup and what you need to know for pillar number 1. And then in the later videos, we're going to answer even more questions like how to find the best stocks to trade, how to actually use the best type of risk management, and also what are the best trading platforms and brokers and everything you need to know to get started. And one thing I just want to mention, in trading, as a trader, no matter what market you're trading, no matter if you're a stock trader, an options trader, a forex trader, or a futures trader, if you're day trading, swing trading, or just investing long term, there's really 2 goals that you have. And a lot of times newer traders will think that they have to win almost all of their trades. But the reality is that you only need to do 2 things. Number 1 is we want to win more trades than we lose. So for example, if you take 100 trades, you want to win more than 50% of those, more than 50 trades. And then the second goal is to have a larger average winning trade compared to your average losing trade. In other words, if on average you are making $200 per winning trade, you want to lose less than $200 for every losing trade. You have to think of yourself as a casino, right? The traders that come into the market and think of themselves as professionals and look at it as a business of probabilities will do infinitely better than traders who try to treat the stock market as a slot machine and just basically rolling the dice and coming in a very undisciplined way. So you don't have to win every trade. You just really want to win more than you lose and have your winners bigger than your losers. And if you can do that, that's going to give you what's called a positive expectancy, where you expect to make money over the long haul. And there's a reason why so many traders lose. I think the number is somewhere around 90% of traders actually lose money. And I think the reason for this is people don't really have a way to know, are you winning more than you're losing, and are your winners larger than your losers? And then another thing I want to talk about is, a common mistake that most traders run into is having unrealistic expectations. Unfortunately, in the trading community, there's a lot of gurus and a lot of promoters and a lot of marketers that will pump up these pie-in-the-sky dreams of becoming a millionaire in a very short period of time. But that's really not how the market works. It's about building consistency. So I'd rather give you a goal that's more realistic. What if you could start to supplement or even replace your current income? Or maybe your goal is to start building your retirement nest egg, or maybe just pay off some debt and start to build your wealth. I think it's really important to start with a very tangible, realistic goal. And if you are following a guru who is promoting this pie-in-the-sky dream of becoming a millionaire overnight, I just want to tell you that that's really not realistic, and the odds of that happening are maybe 1 in a million. But again, just start to think about, what would it be like if you could actually replace or at least supplement your current income? I've talked to a lot of traders who have started with that goal and have moved from a point of struggling and just learning to a point where they have been able to quit their job and move into consistent profitability. So I just want to kind of set the stage and help you set some realistic goals. And I want to emphasize that the time to trade is now. This is a monthly chart of the S&P 500 since the year 2000. So you can see from 2000 all the way to 2014. You'll notice there's been a tremendous amount of volatility since the crash of 2008, which has created a lot of trading opportunities for people with the right approach. And unfortunately, many people have actually been sitting on the sidelines since the crash of 2008 because of the fear or the lack of a simple and effective trading plan. But there's actually been a massive recovery since 2009 that most people, most of the uninformed public, has actually missed out on. So if you've been waiting to start trading, or maybe you've been struggling to find consistency, then now is time to get on the right path. And in the next video, I'm actually going to show you pillar number 2 in the trader formula, which is all about how to find the best stocks to trade. Not all stocks are created equal, and you'd be amazed at how many people actually trade stocks that the odds are stacked greatly against them. And there's very specific criteria for stocks that we want to trade, and I'm going to give you that very specific criteria so you can focus on stocks that have the highest profit potential. And I'm also going to show you a tool that you can use to make this a very, very easy process. So go ahead and click the like button below this video. Let us know that you enjoy this information, that it adds value to you. And also leave me a comment with your top question about stock trading. I will make a point to answer them, and I want to know where you're at right now. What are your struggles? What are your hopes? What are your dreams? What can I help you with? And then finally, watch out for video number 2 that's coming really soon. So I hope you enjoyed this video. Be on the lookout for video number 2. Leave me a comment, like up the video, and I will talk to you real soon.